Tim Melvin of the Deep Value Letter. Think he had a stock that was on his watch list taken out here. Bank stock. We'll have to ask him about this. Tim is he combs the tape for finding deep value in this market, and we need him more than ever now with the market trading near all-time highs.
Tim, are you there?
I am here, guys. Good morning.
Hi, Tim. Snuck in on us. How are you?
I'm fantastic. How are you guys?
Excellent. We're looking at a kind of a sleepy response to the jobs number there, but we are starting to drift down now. We got up, made a new high at 1971 and a quarter, are now trading negative on the day, and we're trading near the lows down near 1966.
I hope it keeps going. I've got a lot of cash.
Are you in a lot of cash there?
Yeah.
You're hoping for a little bit of a pullback there. What's on your radar? What's on your radar for today?
Let's talk real estate today, guys.
Okay.
As I'm sure you guys know, there's been some signs of a real estate recovery since the disaster that was 2007, 2008. REITs back then, the larger ones, were very, very cheap. But as money flowed into it, the prices of most of the major REITs were pushed a lot higher. And a lot of that was done by institutional and index buying. Now, they've done very well. They're very extended. They're at 3 and 4 times book value, yielding 3 or 4%. Fortunately for us on Wall Street, nothing is so overpriced as liquidity. Everybody likes to be in the big names that are in the indexes and trade all the time, and you can trade tens and thousands of shares at a shot. Now, as you guys know, that's not my thing.
Not at all. Not at all.
Not at all.
We found a couple companies that we've been buying lately that are in one of the hottest segments of the real estate market. They're in multifamily housing, which, as I'm sure you guys know, has just been a red-hot sector. Tons and tons of money being made in multifamily housing. Because one thing the credit crisis did do, in addition to driving the price of everybody's house down, kind of ruined their credit. It's not as big a pool of folks as can qualify, especially down among the first-time buyers. So more and more people than ever are being forced to rent, which is fantastic for multifamily housing. Now, I've got a couple names here for you this morning they're small, okay? You can be prepared to think small, guys, and you actually have to, think about where you're placing orders with my stocks. You can't just run out and buy them willy-nilly. But let me give you 3 names that are extraordinarily cheap and have long-term upside. And I'm talking 2 to 3 times what you put into these for patient investors, okay? Because you're buying these great portfolios of multifamily housing at a huge discount. You guys ready for some tickers?
We are.
Okay. I'm going to start with the first one. This one does not pay a dividend. They cut the dividend several years ago. They're not back up to the cash flow levels where that can be reinstated. They're getting there. And as a REIT, of course, they have to pay out a certain percentage of cash flow. So when they announce the first dividend, I expect it maybe next year, you're going to see this stock pop. This is BRT Realty Trust. It's a $105 million company. They own a little over 6,000 multifamily units. This is kind of an interesting story. They were really a finance REIT. They made loans for commercial real estate, multifamily, whatever you needed to borrow money for. And as the credit crisis progressed, they noticed that the values of what they were lending on were extremely cheap. So they started the conversion process, and they're now well on their way to being just a multifamily owner of property rather than a lender. They have a few loans left out there, but as I said, they've got over 6,000 multifamily property units now. This stock is trading at just 79% of book value. So you're buying one of the hottest real estate classes out there at a 21% discount from what the properties are carried out on the books. These properties just get better over time. Now, I fell onto this one reading the filings of one of the most famous and successful investors of all time, Michael Price, formerly of the Mutual Series Funds, is a substantial owner of the shares. And I noticed last quarter, I believe he's buying some more at the current level. So that's one I think you can just put in your portfolio, own for a long time, do very, very well, because housing conditions are not going to improve to the point where multifamily becomes unpopular anytime soon.
This has been really range bound here, really, since the early 2013, between 7 and 740 here, kind of leading up on the upper end of that range. No dividends, so you don't have any principal protection. What region of the country are they in?
They're kind of all over.
Okay.
They are located in Great Neck, New York.
Okay. Okay.
But they have properties all over the country. It has been range bound because they are in the transition process of going from straight lending. They're not paying a dividend, and they're converting to owning multifamily housing. And they're small. They're not on anybody's radar screen. So it's going to take some good news to relate. The reinstating of the dividend, and nobody knows when all this could happen to catch Wall Street's attention and get some buying into this thing. As you know, I'm a patient holder. I'll hold stocks for 3 or 4 years.
Correct.
If this thing can go up to 14, 15, 20 over the next 5 years, I'm okay with that. I'll sit here and wait. I'll eventually start getting a dividend. But I've got two more that do pay dividends.
I was just going to say, Tim, just to give you an idea, everybody give an idea of the size of this company, you're talking about $105 million company. So these are very small companies. So just to keep that aware, obviously you've got to work the orders a little bit with these two. You just kind of send market orders on these things. You never know where you get filled. So if you are looking to get in these things, make sure you work the orders well.
Yeah, I mean, this thing trades by appointment only. For the last 3 days, you've had trades under 5,000 shares. In fact, on the first, it traded 985 shares. So I assume there's no options on this, but
no options. And I'm thinking of getting bumper stickers made up that say, please use a limit order.
Okay. Okay. And what about the ones that pay a dividend?
All right, let's go with Preferred Apartments, APTS. These guys have a unique way of approaching the multifamily market. They give bridge loans, mezzanine loans to the guys that are building apartment complexes. As part of the loan, they take an option. If they like the deal when it's finished, they buy it at the option price. If they don't like it so much, they get paid back by the builder and go away. So it's kind of a great business. They're slowly building a really high-quality portfolio of properties, and they do pay a nice dividend. Okay, this one, it's popped up here in recent weeks, going from $8 to a little bit over $9, but it's still trading just 79% of tangible book value, and we've got a 7.1% dividend on this one. So we're going to get paid really, really well while we wait for the price to go up over time. Compares incredibly favorably to a 2.5% 10-year bond.
Oh, of course.
7.1% dividend. Is that sustainable too, you think, there, Tim?
Sustainable and increasable.
Wow.
Okay. They will get bigger over time. They'll take options on more and more properties. They have great cash flow from these loans. So I believe they can raise this dividend very nicely over time.
So they kind of cherry pick, right?
Absolutely.
Yep. And they're located all over the country as well?
Yeah, they are.
Okay. Yeah. All right. Well, boy, I'll tell you that I'm bringing up a monthly here, and it just had a huge move here in the last month from 8 to 9. So you may expect, maybe a little bit of consolidation here at the $9 area before it makes its next move.
Yeah, I would look for a little consolidation, maybe even a little pullback. There's a whole bunch of money came into this thing in the last month.
Okay.
And pushed it along. All right, now one more, and this is the one. It's my favorite. This is a part of the multifamily or the apartment market that I think is just going to grow and grow and grow and grow, and that is student housing, building apartment complexes associated with and around major universities around the country. Kids don't like living in the dorms, but it gets a little harder to find decent housing off campus. So this is kind of the bridge. And Campus Crest has several developments, one new large one underway. And again, this is the biggest of the ones I'm going to talk about today at $563 million of total market cap. They've got a great business model. They're expanding. The stock is extremely cheap at just 83% of book value. And again, we're going to get paid and paid very, very well to wait for these things to go up.
Could you give me the symbol, Tim?
Oh, I'm sorry, CCG.
Okay, go ahead.
CCG.
Right.
We were sitting on the edge of our seats waiting for it.
And here you've got a 7.59% dividend. Just a good business model. Sharp management, in my opinion. I think the stock will do very, very well. And speaking of management, as recently as March, they were out there in the open market buying shares.
What prompted this move down from 14 to early 2013?
I missed some estimates. I mean, the same thing that pushes every stock down.
Okay. Right.
Wall Street didn't like what it saw in the missed earnings estimate, and that's how I make my living, guys. I love companies that miss earnings estimates because it creates opportunity. There's just so much short-term focus on what is this company going to make this quarter. And it's probably the most irrelevant number in all of Wall Street for a long-term investor. I love it when these things get taken out and shot.
Right. And on the opposite end of the spectrum here, you had a little bank stock that got taken out, right?
Yeah, we did. TD Financial got taken over at a very nice premium to book value. It was about a 60% gain over the price we put it in the banking on profits portfolio less than a year ago. So yeah, that was a pretty good one. That was our fourth takeover, guys, so far this year in the portfolio. And the average gain on those takeovers has been over 40%.
And what was the company that got taken over?
That was TD Financial.
What
Okay.
do you know the symbol? What was the symbol on that?
Off the top of my head, I'd have to go back in and dig through the THRD.
Now,
THRD.
now, when
Yeah.
something like that happens, do you just ring the cash register, or do you take stock in the other company?
That depends on the company. We've had one where the buyer was Huntington Bancorp, HBAN, and Huntington had appreciated to the point I really didn't want to own the stock anymore. So we just sold that one. In this case, we also do not want to own the acquiring bank, so we just sold our shares.
Okay.
But we had Home Trust Bank of North Carolina take over one of our banks, and I love Home Trust. Great bank. They're growing by acquisition, trading at 80% of book value. So we took the shares in that deal. We also took shares in First Merchants, FRME, in a deal earlier this year because we like First Merchants. We think it's a bank that's going to grow over time.
Tim, there's a question coming from the chat from Theo, and I was going to ask the same question, actually. These REITs you were talking about here before, what happens, though, if interest rates do actually start to climb? What happens to these?
Should not be too much of an impact on these guys. If anything, it's going to make first-time home buyers even less qualified to buy a home. So it could actually end up with higher revenues for these guys, and they should see some more attractive projects as well.
So you think they're somewhat insulated from an increase in interest rates?
Yeah, I really do. I don't think it'll affect them too terribly much.
You had talked about earlier on the show RELL, Richardson Electronics here, and I see that just made a huge move a few days ago from under $10 to 10.60. Is that something you're still holding on to?
Oh, yeah. Yeah, I mean, I may die with this stock in my portfolio. I plan on living a long time. Yeah, I mean, guys, this stock sells for less than net current assets, okay? You could literally sell off all the inventory, take the cash, pay off all the debt, and liquidate the company at a profit. So I have no intention of selling this anytime soon.
What about borrowing costs if interest rates go up?
It's going to hurt them somewhat. I don't project interest rates going through the moon anytime soon either. So could hurt them a little bit, but I don't think it's going to be horrible. Not enough to cause dividend cuts or anything like that.
I think that's the good point you're making there too, is how much are interest rates really going to go up? Because we're still just we're obviously pulling back on the QE, but can they really start raising interest rates in a hurry here? I don't think so. I think it would put the whole economy into trouble here. So I just don't see that happening either.
Yeah, if we were to go from 2.5 to say 5 on the 10-year in a very short period of time, the last thing you're going to be worrying about, folks, is the value of your stock portfolio, because there's going to be something really, really wrong out there.
Okay, any final thoughts on just the overall market?
Overall market, we still think it's, I still think it's on the high side of fair. That's certainly borne out by the, economic indicators and measurements that I use, by the Shiller P ratio, the market cap to GDP. So it's a time to be cautious, but just because we're on the high side of fair does not mean we cannot go to the ridiculously high side of fair.
Okay.
So, we've got the rifle out, not the shotgun, sniping for opportunities, looking for safe and cheap stocks. What we can find, we're willing to buy. I don't make market calls as such. So be cautious, be careful, but move forward.
Okay, Tim Melvin, Marketfy maven and author of the Tim Melvin Deep Value Letter, coming on, giving us some low price stocks here that have some upside potential. Tim, thanks for coming on. We hope to speak to you again.
Oh, guys, always a treat. Thanks for having me on this morning.
Okay.
Thanks, Tim.
Bye-bye, guys.